Welcome everyone to the Tuesday live stream for the week of December 18th through 22nd. So let's talk about where the markets are at. And if you guys have been following me, hopefully I've been able to accurately navigate you guys into the end of the year here. We've been using seasonality trends. We've been using seasonality trends for the entire year, the entirety of this entire pre-election year. I've been consistently following, different sector outflows and inflows, looking at different commodities, looking at the bond yields, the overall bond market, and etc. So hopefully you guys have also learned something through that. And most importantly, hopefully you guys are able to, learn some applicable things, especially with regards to the technical analysis part, which is very, very important. That is the basic fundamentals when you're trying to trade. So, with that, hopefully you guys again have been able to accurately navigate the markets with great insight, and hopefully I can do that for you guys, for years to come. All right. So, as you guys can clearly see in the title, I said the end is not in sight for the bull market. So what do I mean by that? Well, if you guys didn't know, NASDAQ is at all-time highs. It's been making new all-time highs for the past couple of trading days. And that's completely opposite of what all these bearish traders or investors have been saying, that we're going to be crashing for this year. But as you guys already know, if you guys have been following me since last year, I've been telling you guys that probably won't happen, right? I mean, every single thing that I was looking at, indicator, numbers, data, it just didn't point in that direction. So again, with this current market run up, is there going to be a very, very textbook pullback? Sure. I'm sure we'll see at least a 5% to 10% pullback, or if it reaches 10%, that'll be a textbook correction. All right. But still, I'm not expecting a 20% market crash or a 20% plus market crash in the near-term future. Even though, there has been new, quote unquote, new claims that, we're going to be seeing a huge, 25-30% market crash because of the fact that we have run up without any sort of reason, obviously run up to the upside. And this type of unreasonable run up is going to eventually lead into a huge bubble that will pop into next year, which is the official election year. So I understand that people are using data from the past. For example, just from the top of my head, we know that during election year, like for example 2000, 2008, and even 2020, we saw those large moves down and that huge market crash. And so that's completely understandable. That makes sense. You guys, they're using historical data to back up their claims. Now, for 2024, right, there are so many reasons to not be just simply expecting a 25-30% market crash, right? 20 to 35% or 30% market crash. It just doesn't make sense, right? So far this entire year, we've been relatively seeing a very strong labor market. Unemployment has not ticked up from its historical lows, and it's just kind of, I will say it, like outright crazy to me that people are saying that all the data that we're getting from just the economy alone is bearish, right? Yes, there are underlying problems that we've been looking at since the start of 2022, since the start of fiscal year of 2022. But the way that the market moves, right, if you guys didn't notice, is that the market moves based on the perception of the future, right? So it's pricing in whatever the future holds, right? Its current price action is literally perceiving what the future will be. So far, that current future perception that the market is pricing in with this entire large move up higher is that the Federal Reserve is going to cut rates, which we already got the official statement in last week's FOMC meeting and from Jerome Powell himself. And again, I predicted all of that in the summer of this year, right? I literally said that the Federal Reserve is most likely going to cut rates next year either right before quarter three or during quarter three. And it seems like we're about to get it during quarter three next year. So that's definitely a great sign. And that's exactly what the market has been rallying with that future perception that the Federal Reserve will be cutting rates. So, now it's just a matter of, with their overall monetary policy, right? I'm not going to say anything right now about the monetary policy. I just need to read a little bit more into what they're doing for next year. But again, it's the market is just, again, based on what we're seeing now, it's been rallying because of that major future perception, and it's pricing in exactly what we're going to be expecting next year. So again, there is really no reason to be extremely bearish into next year. And this is a great segue now to what I want to talk about. So the options market has actually been pricing in a continued run to the upside into January's OPEX, right? And, yes, the market is getting a bit overbought now. It's getting to a point of overextension as well. But that just doesn't mean that we're going to see a huge 5 to 10% textbook correction, right? That's not how the markets work. And so what we should be seeing now is just, tight price action days. We're probably going to see a lot more of that in the next few weeks. And most likely, we're going to just be sitting at highs, right? Without a large move down, okay? And again, even if you're overbought, for example, IWM here, small caps, right? The daily RSI closed at 77.93. So that's overbought, right? Just from a value point, right? If the RSI value is over 70, that's overbought, right? That's a textbook understanding of what the RSI shows us. And so with small caps here, it doesn't mean that we're going to see a huge sell-off. It just means that the buyers are in control and the momentum is still bullish, right? Even today's price action clearly tells us that there's still very good, healthy market rotation going on. A very good market cap rotation, sector rotation, and just overall money rotation in the market. And that's exactly what you want to be seeing during a healthy bull market run. So even with all these underlying, catalysts, the external catalysts, the macros, right? People love to talk about the macros, but at some point the market is going to completely ignore what's going on in the outside world, right? The macros. And again, that's something that I also emphasized back in late 2022. I said that the market is definitely going to be desensitizing to any of the big catalyst news or information that comes out in the economy. And that's exactly what we've been seeing this entire year, right? So again, the number one reason why is that in 2022, we were already very, very volatile for the entire year of 2022. And so the market was eventually it was done pricing in, right? It was done pricing in all those external catalysts and the macros. That's it. That's just the simple reason that you guys can use to understand why the market has become desensitized to all these external catalysts and just overall information and news this year. So again, for small caps, this is just another great example of this really good money rotation, this market cap rotation, as NASDAQ was, I believe, the QQQs here, right? They ended up being up about 0.51% on the day, making another new all-time high. While IWM, the small caps, the Russell 2000, is up 1.94%. Okay, and that's another reason why we started a new position for IWM. And just like I said a couple minutes ago, I think the market still has a lot of room to move to the upside and continuously taking out any shorts that are still trying to short this incredible bull market run up. And so, just the fact that overall, even just retail traders and retail money is still coming in late now at this point. It's just another indication that the market still has a lot of room to move to the upside. And so, with this healthy rotations going on, behind this entire market run up, just simply tells you that again, there is a lot of momentum still left in the market and a lot of shorts that need to be pushed out. All right, that's essentially what we've been seeing the past month, right? For the past month here, and if you guys have been following me as well, the past 3 months, you guys know that I was calling for an official pivot or official bottom from late October to November. I actually said this in the summer months as well of this year. I believe somewhere around late July or early August. That's exactly what I said. Somewhere between the transition from late October to early November is where we'll be seeing that official pivot, and we'll continue to move to the upside into the end of the year. Okay, now there's another great segue, nice transition here from what I'm saying. So everyone has been really focusing on that overall Santa rally, right? And I told my members last week that it seems like the Santa rally has come pretty early, thanks to what the Federal Reserve has been saying. But it's been pretty kind of an eye opener that the Santa rally has come up a little bit early because of what the Federal Reserve has said. Like I just explained to you guys why the market has been going up based on what the Federal Reserve had said last week during the FOMC meeting. So, to me, with my current speculation for now is that the Santa rally is most likely going to be very, very muted. Most likely very muted, but we will most likely continue to see higher highs and higher lows, right? And again, tightly price range days, like I said earlier. And usually we tend to see, up days, really, really big up days towards the end of this week and into early next week. I believe Christmas Eve and Christmas is, right. So, right after Christmas, which is on Monday, we tend to continue that Santa rally into the 26th, the 27th, and the 28th, right? And then we start to cool off as we head into the end of the year and into the new year, especially as the institutions are starting to rebalance their portfolios, right? Hey, what's up, Commander? What's up? Hey, do nothing. What's up? What's up, guys? So for all the people who are just joining in now, you guys missed a lot. So make sure you guys watch the first at least 10 minutes. Hey, Ray, what's up, man? So watch the at least first 10 minutes of the recording here. Obviously, you guys should know this by now. The live stream here will be automatically posted onto my channel. So make sure you guys watch the first 10 minutes. I say some very, very important stuff that you guys have to watch, right? So don't miss out, right? Especially if you guys are trading tomorrow, okay? So so for all the people who are just joining in, what's up, guys? Make sure you guys watch the recording. All right. So now, as I was saying, with the Santa rally here, again, it's just overall, in conclusion, right, as a summary, I think it's going to be very, very muted. All right. Yes, we're going to continue to go up higher, but the price is going to be, the price ranges are going to be very, very tight every single trading day. So hopefully that makes sense, right? And again, the dates are, 26th, 27th, and 28th, but usually we tend to see more of a higher volatile move around, I would say around Thursday and Friday of this week, but usually at the end of this week, so Friday, the 22nd, right? And then we tend to see that continuation after Christmas on the 26th, 27th, and then 28th, okay? So something that you guys should mark on your own calendars, okay? Now, that kind of concludes my overall market analysis that I want to give you guys. And I just want to go into some of the trades that I've called out here for the members. So Amazon was a great trade that I called out last Friday. This was a triple-digit return for me. It's been doing pretty well. It was a nice flip here, and it was also the #1 swing trade idea for this week's newsletter. It was #1 on the newsletter. And yesterday we got this very nice pump up higher. Now I don't know why this happened with Amazon, but from a technical standpoint, it was due to happen because we have a very nice bull flag here, right? Or if you guys want to be a bit more specific, an ascending triangle chart pattern. And well, actually, maybe the outside catalyst was maybe because we're heading into the holiday season, and Amazon tends to get a lot more volume on their site during the holiday season as people are making last minute, orders for presents, which is what I'm doing. So, it's overall, this was a great swing trade. I'm still holding half. And for the people who haven't gotten in yet, you guys aren't you guys shouldn't be feeling left out or having FOMO, because Amazon still has a magnet towards 158.50 or just 159 if you guys want to round up. So I have my eyes set on 159. Ideally, it would be 160, but Amazon is getting a bit too overextended on the weekly as well now. So I'm going to keep it tight here and make sure you take profits into strength as always. So again, this is a great triple digit return so far. So this is one of the great trades that we did the past couple of days. And then Tesla, for the past week or so, we've been in this one for a while now. And this one should continue to move to the upside. I gave you guys so many perspectives and analysis on this one on my Twitter page or X page, and on YouTube as well on the live streams. So make sure you guys watch the live streams. I talk about Tesla quite a lot, but this is a very good expansion from 20 plus days of compression. So even a day like today, we have an inside day candlestick after taking out some weak buyers yesterday with its inverted hammer candlestick on the daily. So as you guys already know, if you guys don't know, this inside candlestick always indicates that the trend will continue, right? And as long as we break over today's highs, which was at 258.34, we should continue to hit my first major target at 260, and then we should continue on to 273. So that's about let's see, let's make it a little bit more accurate here. So from today's close, okay, that's another 6% move higher from today's close. All right, so there is a lot of room left for this one to move. And again, this is another swing trade that we are currently holding that's at triple digits here. I also gave out a signal to my members as well, so hopefully they're doing great. But again, if you guys haven't been in Tesla yet, you're completely fine. If you guys can't trade Tesla because it's a bit too expensive, okay, TSLL is a great alternative. It's the 1.5x leveraged shares of Tesla. So it's the bull 1.5x leveraged shares. All right, so this one, again, I made another great call out on this one. The option contracts that we're in now too is in the money now. It was at the money yesterday and the day before that and the day before that as well. But now we're officially in the money here. This one is at double digits. So this one's looking to become a great triple digits if we continue to see this nice uptrend in the underlying share price here. And that will obviously be very, very beneficial and in favor for our current position in TSLL as well. So this is another second layer on top of that TSLA Tesla first position. Okay, so that is kind of our major trades that we have now, especially for the members here that I've given out. And before I end the live stream here, I want to talk about a very popular ticker that I know people will hate me to say this, but PLTR. Okay, so PLTR, it's looking weak. All right, and the reason why I say that is, number one, on the weekly time frame here. So we've had a great run to the upside this entire year, right? Since the middle of this year, we came out from single digits to the teens, and now officially in double digits, right? Basically, essentially. And during this uptrend, it's been kind of volatile, right? And that's fine. We saw some great consolidation, another leg up higher, and another consolidation. But now, currently, it seems like the name wants to break down. And even the RSI is showing us a very good hidden bearish divergence. So what we're seeing here, what I just drawn here for you guys, okay, is a hidden bearish divergence on the RSI relative to the price action here. So right now we're making higher highs and higher lows on the price action, but on the RSI itself, we're making lower highs and lower lows. This is usually a very bearish pattern here, an indication. And even without the RSI, okay, on the weekly here, we're starting to lose the support on the weekly 10 SMA. That's never good, right? If we're starting to lose the weekly 10 SMA, that indicates weakness. And so far, this, if I can just show you guys this. So my weekly 10 and 21 SMAs are starting to become a bit far away from each other. So if I want to see a continuation of this ticker's price action to the upside, okay, what I would ideally want to see is the price continuously staying over the weekly 10 SMA compared to, not compared to, excuse me guys, continuously staying over the weekly 10 SMA and staying over the weekly 21 SMA as well. Hey, Ray. Hey, you're welcome. Thanks for all the valuable tips. Of course. Hopefully these are all applicable tips as well, not just valuable too. So again, so for PLTR, I don't like how the 21 SMA is starting to flatline. What I will ideally want to see is the price continuously staying over the weekly 10 SMA, and then seeing the weekly 21 curling up higher, right? And as it's curling up higher, it's closely following behind the price action, but that's not what we're seeing here. So if this distance between the 10 and 21 on the weekly time frame becomes a bit large, okay, if it starts to continue to widen up, that means the price will eventually catch up to the downside towards the weekly 21 SMA to at least retest it. So this is why I think PLTR is most likely going to come down to $17 and eventually break below the weekly 21 and head back down to the next major level of support below 17 at $16 before we see an official pivot. Okay, and so far, last week we made a nice inside weekly candlestick. And this came after the fact that we've had a pretty bearish candlestick with an increase in sell volume here, and it closed below the weekly 21 SMA, and we've been constantly having trouble staying over the weekly 10 SMA, excuse me guys. So again, this 10 SMA trouble and the fact that the 21 SMA is flatlining and potentially starting to curl downwards is bearish. Okay, and on top of that, we have the hidden bearish divergence on the RSI. Okay, so PLTR, make sure you guys take a look at it. We got an official trade today on PLTR that I gave to my members. So if you guys want to know exactly what that trade is, make sure you guys DM me on Instagram or PM me on Twitter or X. And yeah, we can go from there. All right, so yeah, so this is the trade idea that you guys should be looking into, because again, I believe a pivot is coming soon that will lead into that breakdown to the downside into $17 and eventually back down to $16. All right, so that is it for this live stream. If you guys really enjoyed what you guys heard, make sure you guys leave a like down below. That really helps with the YouTube algorithm. It tells YouTube that, hey, people are liking this live stream and that people want to see more of this live stream and future live streams. So if you guys are able to, hit that like button down below, make sure you guys hit that like button down below, especially if you guys enjoyed this valuable and most importantly applicable information. And if you guys aren't subscribed yet, make sure you guys hit that subscribe button and make sure you guys hit the notification bell. Right, that will let you guys know when I am live and also when I am when I have posted a video as well. So again, make sure you guys hit that notification bell after you have subscribed, just so that you guys are notified whenever I'm live and when I have uploaded a new video. Hey Ray, thank you so much. So yeah, that is it for tonight, guys. Hopefully this was a helpful Tuesday live stream. I will be seeing you guys on Thursday at 8 p.m. Pacific Standard Time and 11 p.m. Eastern Standard Time, the same time. All right, have a great rest of your night and good luck tomorrow.